Imagine Amazon entering the realm of satellite internet with a project so ambitious, it's already surpassed the 100 satellite milestone. But here's where it gets intriguing. How might this massive investment in Project Kuiper impact Amazon's stock price? On Monday, Amazon launched another batch of 24 satellites from Cape Canaveral, Florida, marking their fourth launch for this initiative. These satellites are joining the growing fleet of low Earth orbit vehicles, and Amazon chose to partner with SpaceX, the company behind the popular Starlink service. Project Kuiper was unveiled almost 6 years ago with a grand vision to deploy over 3,000 satellites to bring internet access to an estimated 400 million to 500 million households worldwide, including some governmental and corporate entities. While Amazon hasn't yet launched a commercial product, they recently signed a deal with Australia's National Broadband Network to provide internet services to over 300,000 customers by mid-2026. A journey towards achieving this goal has faced its fair share of challenges. Amazon has secured more than 80 launch slots to deploy their satellite constellation, but they face a deadline set by the Federal Communications Commission to launch roughly half of their satellites by July 2026. Monday's launch was delayed due to weather conditions, a common setback in the space industry. Today, Amazon's stock is showing a slight dip, trading at around $221.82. This movement in the stock market comes amidst broader concerns about Amazon's financial health, particularly the performance of their AWS cloud business, which didn't meet expectations compared to competitors like Microsoft and Alphabet. So, what exactly is Project Kuiper? In his letter to shareholders, Amazon CEO Andy Jassy emphasized the project's potential as a significant revenue stream. He highlighted that Kuiper aims to offer superior performance and competitive pricing, positioning itself to challenge Starlink in residential and enterprise markets, as well as government contracts. However, reaching the FCC's mandated satellite deployment schedule is proving challenging. Some analysts doubt Amazon's ability to meet these targets, citing delays with rocket providers. Despite these hurdles, Jassy remains optimistic, expressing confidence in securing enough rocket launches to bring the service into a commercial beta phase later this year or early next year. The debate around Amazon's Project Kuiper investment continues among stock analysts. Amazon has committed to spending at least $10 billion on this endeavor, raising concerns about how this expenditure might affect the profitability of their North American retail segment, especially given the absence of immediate revenue streams. Needham analyst Laura Martin noted in her latest report that investors are primarily concerned about weak AWS margins, the substantial investment in Kuiper and Alexa, lukewarm earnings forecasts, and increased capital expenditures. Despite these worries, she maintains a buy recommendation for Amazon stock. Conversely, other analysts remain bullish about Project Kuiper's long-term revenue potential. For instance, BofA securities analyst Justin Post suggested that even a modest 30% consumer share of the market could generate approximately $7.1 billion in revenue for Amazon by 2032. He also pointed out potential synergies between Kuiper and Amazon's logistics network, as well as additional revenue opportunities through AWS's enterprise and government clients. The IBD stock checkup tool currently gives Amazon stock an IBD composite rating of 94 out of 99, reflecting strong overall performance metrics. However, as with any investment, there are risks involved, and the future success of Project Kuiper remains uncertain. In conclusion, Amazon's push into satellite internet with Project Kuiper is a monumental step that could reshape the industry. But will it pay off financially for Amazon? Only time will tell. What do you think? Are you optimistic about Project Kuiper's prospects? Or do you have doubts about its ability to meet the FCC's requirements and generate significant revenue? Share your thoughts in the comments below.